You know how people always say term insurance is the most important part of your financial plan? Well, they're not wrong, but here's the catch. Choosing the right term plan isn't as simple as picking the one with the cheapest premium. There's a whole process to it, and that's what I'm here to talk about today. And this video is a complete checklist for selecting a term insurance policy that doesn't just sound good on paper, but actually works for you when your family needs it the most. Now, this is based on real-life claims experiences, deep product comparisons, and conversations with insurance experts. So yes, take notes because this might be the most important 5 minutes of your insurance journey. If you ever need help choosing the right health or term plan, then book a free call with Ditto. We do it without spamming you, and our services are completely free. The link's in the description. Alright, now let's start with the insurer itself. Before you even dive into seeing what the features are, you need to assess how reliable the company is. We usually look at 5 things here. Claim settlement ratio is the big one. It tells you how many claims the company has honored out of the total that they received. A number above 97% is usually considered solid. Then there is the amount settlement ratio, which basically tells you how efficiently the insurer is paying out the claims on time. You'll also want to see how many complaints the company gets per 10,000 policies and how quickly they resolve them. High volumes of business also matter. It shows that they're stable, experienced, and usually have a better servicing setup. Finally, check the solvency ratio. It's a measure of the company's financial strength, and anything above the mandatory 1.5 means the insurer is in good health to settle large claims if needed. Now, once you've locked the credible insurer, the next step is to figuring out your coverage amount and policy duration. See, as a rule of thumb, we usually recommend 10 to 15 times your annual income. But see, this isn't just a random multiplier. You need to factor in a couple of things like ongoing loans, living expenses, kids' education, future plans, and most importantly, how inflation could eat into real value of money over time. Now, for the term, your policy should ideally last till retirement or until big responsibilities are taken care of. That's why most people go for a term till age 60 or 65. That is enough to cover their earning years without paying high premiums into old age. Alright, now let's talk about riders. Now, these are optional benefits that you can add to your plan, but not all riders are useful. The critical illness rider, for example, is one that we strongly recommend at Ditto if you're diagnosed with something major like cancer or heart condition. So what this rider does is pay out a lump sum that ensures your family won't have to worry about treatment costs even if your regular income takes a hit. Another must-have is the waiver of premium rider. Say you're diagnosed with a critical illness or become permanently disabled. This rider ensures your policy doesn't lapse. The insurer waives off future premiums, but your cover still continues as planned. That said, some riders are better left out. The accidental death rider is often redundant because your base term insurance already covers death due to accidents, and the return of premium variant. Now, that sounds tempting, but it can almost double your premiums. Since term insurance isn't an investment tool, we don't think it adds real value. Now, same goes to joint life policies or increasing cover options. These features may sound fancy, but in most cases, they don't justify the cost or offer meaningful benefits. But what adds value to your term plans are the inbuilt features. Now, this is important. Take terminal illness cover, for instance. If you're diagnosed with terminal illness, some insurers release a part of the claim upfront so your family can deal with urgent expenses. Then there's something called the instant claim payout, where the part of the sum assured is paid immediately after death claim intimation. That gives the family time to handle hospital bills, funeral costs, or just get through those early tough weeks. Now, there's also something called as the auto cover continuance feature, which lets you skip your premiums in case of financial stress. Now, this is without losing your coverage. Some insurers also offer zero cost options where you can exit the policy and get your premiums back after a certain point. And now, many new age term plans also include health management services like annual checkups, teleconsultations, and fitness linked rewards. We've made a complete video on health management services combined with term plans. I'll link it in the description for you to see. Now, this is a great way to stay on top of your health while your policy is running. Now, another useful one is the life stage benefit, where your coverage increases automatically when you hit key life milestones like marriage or childbirth. That means your protection grows in line with your responsibilities without needing a new plan. Okay, now let's talk about the important part, money. The premium structure of your policy is just as important as the features. Now, thanks to the recent GST reforms, term insurance premiums have become more affordable since GST is no longer levied on them. But always read the illustration documents carefully. Some insurers show a low first year premium to reel you in with all the discounts, but the actual premium starts from the second year onwards, and that can be really high. So double check the long-term cost, and also don't compare just the price. A slightly more expensive policy with better claim service, stronger features, and smoother onboarding experience is often worth every rupee. Now, next comes a very important part that most people miss, and that is understanding exclusions. Yes, term plans do cover all kinds of death, but there are a few exceptions. Now, suicides are not covered in the first policy year, death due to intoxication or illegal activities, or if the nominee is found to have caused the death. Now, these are, again, not covered. There's also a concept called the moratorium period. Now, for the first 3 years of the policy, insurers can investigate any misrepresentation, but after that, they can't reject claims unless there's a proven fraud. So, if you're honest at the time of purchase and you cross the 3-year mark, your family is in a much safer zone. And finally, let's talk about how the policy actually gets issued. Once you apply, you'll fill out a proposal form disclosing your lifestyle, occupation, and medical history. Based on that, you may be asked to undergo a telemedical or even a physical medical test. The underwriting team then evaluates your risk profile and either issues the policy, offers it with changes, or straight up declines. The whole process typically takes anywhere between 10 days to a month, but once done, the policy becomes a strong pillar of your financial plan. Now, in conclusion, good term insurance plan is not just about securing a claim, it's about peace of mind. And when you make your choice carefully based on claim performance, product flexibility, honest disclosures, and future needs, it can be the most powerful gift that you leave behind for your loved ones. If this still feels overwhelming, that's okay. That's what we're here for at Ditto. Please book a call with us. We will not spam you. There will be no salesy approach, just personalized, unbiased advice from our IDI certified experts. And if you found this useful, leave your questions in the comments below. We'd love to answer them. Share this with someone who might be buying the first term plan. And again, don't forget to subscribe. That's the easiest way to support our mission of making insurance simple and accessible for every Indian out there. I'll see you in the next one. Until then, happy insurance hunting.